The Indian stock market witnessed a decline on April 1, 2025, with both the Nifty and Sensex closing in the red. The Nifty 50 index fell by 1.5%, closing at 23,165.70 points. The Sensex also experienced a significant drop of 1.8%, ending the day at 76,024.51 points. This decline can be attributed to various factors, including investor anxiety and global market uncertainty. One major concern among investors was the impending announcement of reciprocal tariffs by former U.S. President Donald Trump. These tariffs, expected to be implemented without exemptions, are scheduled to be revealed on April 2, 2025. The possibility of a renewed trade war between the U.S. and other countries, particularly China, has sparked fear and uncertainty in global markets. The decline in the Indian market was broad-based, with most sectoral indices ending lower. The IT and private bank stocks were among the worst hit, primarily due to their significant exposure to the U.S. market. Any negative impact on the U.S. economy due to the tariffs is likely to have a ripple effect on these sectors. The IT sector emerged as one of the biggest losers, with the Nifty IT index plummeting by 2.5%. The pharma sector also faced selling pressure, declining by 1.8%. Banking stocks, represented by the Nifty Bank Index, witnessed a drop of 1%. Other sectors like FMCG, metals, infra, and auto also closed in negative territory, reflecting the overall bearish sentiment in the market. Global market cues painted a mixed picture. While the U.S. markets had closed higher overnight, with the S&P 500 and Dow Jones gaining 0.55% and 1% respectively, Asian markets were recovering from Monday's losses. Japan's Nikkei 225 was up by 0.6%, Australia's ASX 200 rose by 0.34%, and South Korea's Kospi climbed 0.92%. This mixed performance in global markets added to the uncertainty prevailing in the Indian stock market. In the commodities market, gold prices surged to record levels, fueled by safe haven buying amid global uncertainty. Spot gold crossed the $3,125 mark, reaching a high of $3,161 per ounce. On the multi-commodity exchange, gold futures closed at 90,777 rupees per 10 grams, marking a significant increase of 657 rupees. Crude oil prices also witnessed an uptick, with MCX futures settling at 6,145 rupees per barrel, up by 21 rupees. Foreign portfolio investors showed signs of returning to the Indian market, providing some respite. After being net sellers for most of March, FPIs turned net buyers in the last few trading sessions, reducing their net outflows for the month to 3,972 rupees. This renewed interest from FPIs could potentially provide some support to the market in the near term. From a technical standpoint, the Nifty 50 index is facing resistance at the 23,650 to 23,800 levels. A break above this resistance zone could propel the index towards 23,850, 24,000, and even 24,100 levels. However, if the index fails to breach this resistance, a further decline towards the support levels of 23,280 to 23,200 is possible. A breach of this support could lead to a sharper fall towards 23,100 and 22,900. Market experts believe that the current market volatility is likely to persist in the near term, driven by global uncertainties and domestic factors. Investors are advised to remain cautious and avoid making any impulsive decisions.